Welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses. If you have any questions today, please ask them in the comments box in the live feed. At the end of the session, if you need any more advice or any more questions, please join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7 to help. During today's live session, we will be running a poll, so please do engage with that, and at the end of the session, I'll reveal the results. So hopefully a few of you have tuned in to me on Ask the Expert before, but if you haven't, my name is Judith Dugdale, and I'm a chartered accountant based in the northwest of England. I work for a firm called MHA Moore and Smalley, and we do all the things you would expect a firm of accountants to do, such as year-end accounts, corporate tax returns, self-assessment, payroll advice, VAT advice, everything really, plus a little bit more. So because we're a large firm, we have some extra departments that you don't necessarily always find at the normal run-of-the-mill chartered accountants. So we have a corporate finance team who are just there to help advise our clients on how to grow, buying other businesses, how to exit their business, management buyouts, and also raising significant amounts of funds. And we have an independent team of financial advisors who look at the wealth management for our clients, so pensions advice, investments, life insurance, that type of thing. And then my team, I head up, we are another little offshoot. And what we do is we just look after clients who use cloud accounting software, such as QuickBooks Online. We've been an Intuit partner since 2015. We currently hold the Elite status, and we have well over 1,000 clients using QuickBooks Online at the moment. And my role within that team is twofold. One is to look after a portfolio of clients who range from small startups to £2-3 million turnover businesses, with the one thing in common that they use QuickBooks Online. And we help them with their compliance work. So that is like your year-end accounts and your tax returns. But also we offer strategic advice to help them get the most out of their business and to be able to retain as much money as possible and pay the least amount of tax, obviously all within those rules. The other part of our team is that we have 2 dedicated software support managers. And what they do is work with clients from around the firm and new clients to the firm who want to change their bookkeeping processes. So they might be using a desktop piece of software, or they might be on manual records. And what we do is we talk them through the best system for them, which might be QuickBooks Online plus a CRM product or another app. And we build them their bookkeeping process and their systems. And then we provide the training on how to use it and continued support ongoing. So happy to answer any questions today about QuickBooks itself. And if I can't answer those, I can obviously give you some details of how to get in touch, and one of my team could help. But the other thing is, as I said, is a lot of business support that we give. And at the moment, it's really interesting and exciting field to be in at the moment, accountancy, because we're really helping a lot of clients who are suddenly back open after being shut for months. Obviously, last month, the hospitality and leisure sector could open outside. And I'm pretty certain everybody watching this now will have made a trip to their favourite bar or restaurant to have a meal outside. And it's been fantastic, and they've been so busy, and everybody is coming to us for help in terms of managing their cash flows going forwards. And especially now with obviously Monday, fantastic that it went ahead that hospitality indoors could open and gyms inside, and doing classes and all that side of things. And in my team, we look after an awful lot of bars, restaurants, hotels, gyms. So it's been a really lovely time to be doing what I do, speaking to clients who can now open up and get back to what they love doing, and then coming to us for a little bit of help. Because it is great that businesses are back open, but you've got to be a little bit careful. It's very easy when you're very, very busy in your business and there's lots of cash coming through the till, so to speak, that you can get a little bit carried away with how much cash you've got. So it's really important to remember some considerations about some of the normal day-to-day business things you would have done if you hadn't had a break. And it's just remembering that you've had 5-6 months off, some people. So it's really important to remember how things were, and some of the I suppose checks that you had in place that you maybe not had to do because you've just not had to face that. So key things we're talking to people about is around cash flow, and just remembering when they have to pay the suppliers, things about wages. So hospitality, leisure, gyms, that side of things, because they've been shut for such a long time, they've had the furlough scheme to help pay their employees. Now, the furlough scheme is still around, and it will be around until September. And that is to help people who are opening up in phases and maybe don't need all the staff back. And that will continue to pay like the 80% of their normal salary, and you continue to pay the employer's national insurance and pension. But it's obviously they come back to work either using the flexible furlough or no furlough. It's down to you, the business owner, to then pay them their normal wage, the full 100% of what they should be being paid. So it's remembering that, factoring in how much that is, because you'll have been used to just paying the pay as you earn and national insurance and things on 80%. Well, it's going to be 100% now. So it's reminding yourself how much that is going to be and making sure that money is put to one side. It's making sure you use the furlough scheme the best you can, particularly in the sector of hospitality and leisure. There will be some staff who haven't been vaccinated who maybe are very, very cautious about coming back to work. So maybe have those conversations now with your staff to make sure everyone is willing to come back. And if you've got a few that are very wary, that you could maybe leave them on the furlough scheme and bring everybody else back full time or on their full normal hours. The other thing is, pre-pandemic, a lot of established businesses did have existing debt. And when the pandemic hit, the government worked with banks and other finance providers to offer payment holidays. So you may well have had pre-pandemic had monthly payments going out for HPs or bank loans, and they will probably have stopped during the pandemic. The banks will want them to start again now you're up and running. So it's remembering how much they are and when they fall due. Plus, the government gave obviously lots of new debt out relatively cheaply. So you may be one of the businesses that took out CBILS, which is the business interruption loan scheme. You may also have taken out, you could have one or the other. You may have taken out a business bounce back loan. And all of those loans came with a 12-month repayment holiday. So you didn't pay anything in the first year. Now, most people will have taken those out in April, May, June, July of last year. So you will be coming up to the date that they start to be repaid. In addition to that, if you did the VAT deferment last year, so if you had a VAT return that was due to be paid in April, May or June, you could defer that payment for 12 months. Now, hopefully all of you who did do that have spoken to HMRC in the last, say, like 6-8 weeks to create a time to pay agreement, which means that amount of VAT you could pay it off over, it was originally 11 months, I think it's down to maybe 9 months now. So if you haven't arranged for how you're going to pay back that VAT deferment, then if you speak to HMRC, they will put a time to pay agreement in for you. If you've already done that, that's great. If you don't want to do that, then it is obviously due now. So you will be chased for that payment if you've not put a payment plan in place. So what I'm saying is there's on top of your normal paying your suppliers who are providing you with all the goods that you are then selling on to your customers, you've got those more chunky bits of payments to just remember and deal with. And then coupled with that as well is there's also the issue of VAT currently as well to deal with. So I'm pretty certain if anybody out there has tried to book a restaurant, tried to book a hotel, even gyms and things, the amount of people that are coming back to them is increasing, and memberships are going through the roof. or at least they are from the clients I talk to. What all this means is that a lot of businesses are going to be getting quite a lot of cash in quite quickly. Now, if you're VAT registered, you need to remember to keep to one side the VAT. So again, it's really important to make use of your software that you use. If you use QuickBooks Online, which hopefully if you're watching this, you're either considering it or you already do, QuickBooks Online is fantastic because as long as you're bringing in all your income and you allocate that to the right category and you mark it as being VATable income, when you go into your taxes section within QuickBooks Online, you will be able to see at any given moment the VAT that you owe at that point. So you can start to get an idea of those cash flows. And finally, within QuickBooks Online, there is a mini cash flow area which you can look at, and it looks at the bills that you've put on the system in terms of supplier invoices. It looks at the income that's been coming through recently, and it will give you a kind of a cash flow projection over the next few weeks and months so that you can see how your cash flow is looking and build into that the VAT payments due. And then you can look at that and go, but on top of that, I also know about these business loan repayments that I have to make as well. So overall, I'd say embrace being back open, embrace everybody who's wanting to get out there and starting to spend money again. It's fantastic for the businesses and those businesses that supply the newly opened ones. But just have a chat with your accountant, get some professional help, and just make sure you're aware of how you need to keep track of your cash flow, and then everybody is going to be happy in the long run. Okay, so I'm going to take some questions that have come through. I'm just going to get a quick glass of water, sorry. Okay, so the first question I've got today is from Drew on Facebook Messenger. And Drew says, I run a bed and breakfast and it's been pretty rough the last year, but we're now pretty much booked through till autumn. Because I'm pretty sure that cash is coming in, do you think it's safe to start investing in the business again, or should I be more cautious? So Drew, great question. This is exactly what we've been talking to our clients about, because as I mentioned, everywhere is getting booked up because people are desperate to have a break. And you being booked up through till autumn is what my clients are telling me. So that doesn't come as a shock at all. In terms of thinking about investing in the business again, I think it is very important for bed and breakfast hotels to make sure they maintain a level of a certain standard, because you want those guests to love it and come back. But as I've just said, you need to make sure you're taking into consideration the bills that are going to fall due and any debt that you've got to start repayments. So what I would suggest is that you now you know what your bookings are till the end of autumn. I would have a look at what that actually means in income. So each month, how much sales that will be, and how many pounds effectively you're going to get. So it might be you're going to take in £10,000 every month. I would then look at what those costs to do with that are. So if you've got any staff, how much you pay them each month. Suppliers like your laundry, your food, heat and light, how much each month that will be. Make sure you take into consideration any VAT that you've got to pay over. Then knock off any loan repayments that you need, and you'll be left then with an amount each month. And once you know what that figure is, you can then decide how much of that you want to reinvest back into the bed and breakfast. So I think with the amount of money that's coming into businesses like yourselves, there should be enough there to reinvest, but it's worth doing that exercise of checking the total income, the total expenses, just to make sure you don't overstretch yourself and put yourself in any difficulties later on in the year. And it is also just important to bear in mind what happens post-autumn. How is the business going to be looking then? Quite a lot of bed and breakfasts will shut in, say, January and February, which are notoriously quite quiet, and they tend to go on holiday. So if that's you, how much money do you need within the business to get you through that period of time? So I'm afraid it's cash flow planning. And I definitely suggest if you give your accountant a quick call, they'll give you a bit of a guidance on what some of those costs will look like. And again, if you're using QuickBooks Online, you should be able to pick up a lot of that information from what's already within your software. The next question is from Fahim on Instagram, direct message. Fahim says, our cash flow right now is better than ever. But even if we stayed at this level for the next 6 months, I'm not sure this will cover all the debts we've got from being closed for so long. Is there any support we could be looking for? So I'm not sure whether you already have got things like bounce back loan or a business interruption loan scheme. They are now shut, and they shut at the end of March. However, the government have released some new similar loans that are available, which are all about rebuilding and pushing your business further on. But they could obviously be used to help paying off older debt as well. Now, the interest rates are not quite as good as they were on the bounce back loan and C-bills, but they are still pretty good and fairly cheap debt. So I would suggest, and I know people don't like doing it, and I've never quite understood why, but I suggest you speak to your bank manager. And if you don't have a direct bank manager, if you ring the business banking telephone number you've got, or even go online and do the web chat with them, and just say you need to speak to somebody about raising some finance, and they really are experts in what probably works best for your business. You've not said what it is that you do, but it doesn't necessarily have to be a loan that you look for. You could look at, if you've got lots of customers who pay you on 30, 60, 90 days, you might look at invoice discounting. There is also some sort of third-party lenders that will link into pieces of software like QuickBooks, where you can easily finance some of the customer balances that are owed to you. And you can do it fairly cheaply. I know there's, I think it's iWalker, do a really good instant payment of invoices to you at a very, very reasonable rate, and you can choose which invoices you want to put through that. And that could fast forward some cash for you to help with some of those payments that might be coming through now that you're looking at. In terms of grants and that side of thing, unfortunately, there's not as many out there at the moment, but keep an eye on gov.uk for any updates on there in different finances, and speak to your accountant, because they will know about any grants in your local area that may be applicable to you. Again, they tend to be focused depending on what sector you're in, and some sectors there's just nothing out there at the moment. Other sectors, like things linked to research and development and digital side of things, there are still some grants out there for those businesses. So speak to your accountant and see if they can give you a bit of advice on what's available for you in your sector, in your area. I've got a direct message on Twitter from Lisa, and Lisa says, what are the biggest mistakes most businesses make when predicting their cash flow, and how can we avoid making them ourselves? I would say one of the biggest issues in cash flow forecasts and cash flow predictions is overestimating the income that you're going to get. And it's quite easy to do, especially when you're having a particularly brilliant month, that you can get into the habit of assuming that's going to continue. The other big mistake that happens quite a lot in cash flows is that if a business is growing, and they put into the cash flow all those costs that they know come in. And obviously, if you're a hotel with lots of bookings, it's very easy for you to forward predict your income. What we find can happen in those situations is that they underestimate the associated costs that rise with that income. In every business, you have what we call fixed costs and variable costs. Your fixed costs are things that pretty much as soon as you open the door, you've got to pay for, and quite often have to pay for even if your doors aren't open. So if you think about things like your telephone, heat and light, those sort of costs, internet, advertising to a certain extent, a bit of marketing budget, those costs, it's irrelevant whether you're working at 50% or 100%, you're still going to have to pay those. And that's why we call them a fixed cost. It's not something that necessarily jumps up. If you sell another £30 worth of goods in a day than you did yesterday, it will stay fairly fixed. A variable cost are things that will go up as your turnover goes up, or come back down as your turnover goes down. So if you think about it in maybe a bar, restaurant, you are half empty. So instead of having your normal 6 waiters on, you only have 3 because the bookings aren't as much. However, you've looked ahead and your bookings for the next 2 weeks, you're full every single night. So therefore, you're going to need all 6 members of staff in every single night. So they are variable costs. As you're getting more people through the door, you need more staff to help deal with those. So one of the problems we see quite often is that people will predict that income line and then not necessarily increase the cost line. They'll think about things like the food that they're buying if they're in a bar and a restaurant, and the beers and alcohol, but they maybe forget about the extra staff they might need. So one of my bits of advice will be, if you're doing the cash flow, is when you're looking at your different costs, just have a think about, will they increase if I'm busier, or will they stay the same? And make sure you apply some sort of percentage increase on those costs as you're predicting your turnover to go up. And likewise, if you know that there's a particularly quiet month, remember to knock down those cash flows. The other thing is to make sure you account for VAT within your cash flow. There's no point putting in all your income if you've got to give 20% to HMRC. You need to make sure you take that into consideration. Otherwise, you're going to have a bit of a hole in the bank at the end of it when you have to make that return payment. The next question has come through from Paris. And Paris has sent a message on Instagram. And she says, hey, Judith, I know it's a while off, but I'm worried about furlough ending and having to let go of some staff. What could I be doing now to save money or cut costs to stop that from happening? So I'm not sure, obviously, what sector you're in. So I'm obviously, if you're a business that's just opened now and you're linked to hospitality and leisure, you're probably having some very exciting times ahead with quite a lot of cash coming in. If you're not in that sector, then obviously you will have been open for a while, and therefore you're probably already at some sort of level where you know you're going to be. And the furlough, I presume, is helping you to retain some of those staff that you don't want to lose just yet, just in case things pick up. And obviously that's great that the furlough can enable you to do that. But yes, there is that issue that once you get to September and the furlough ends, is you have to make that decision. Will you let them go, or will you have adequate income coming in to cover their wage? I guess in terms of cutting costs, it's a case of looking at, if you use, for example, QuickBooks Online, and you're keeping your records up to date on a weekly basis, you'll be able to run some reports within the report section. If you run an income and expenditure or profit and loss, depending on how your QuickBooks is set up, you can run that, and as long as it's up to date, it will give you a breakdown of all your costs, and you can run that report and ask for that report. You can customize it to be run by weeks or run by months. Probably suggest that maybe you run a P&L for, say, 6 months, and then you get it to show it by month, and then you can see line by line next to each other what those costs look like. And you might well see that some months it's much higher than other months. So I would look into those costs and see why they were lower some months, why they were higher other months. And actually, those months where they were a bit lower, was it just because you chose to spend less? And actually, did it have an impact on your income that came through in the next month or two? And if it didn't, then maybe look at whether you can drop that cost back down again. I wouldn't look at trying to cut too many costs too quickly without seeing what effect that has on your income. Again, I don't know what sector you're in or what it is that your business does, but it can, you can cut a cost and it doesn't really have too much effect on your income. You can cut another cost and it could have a massive effect on your income. And I think in there, things like marketing, paying for like SEO sort of stuff. Sometimes you can think, well, it's cost me quite a bit of money, that SEO, but as soon as you stop it, you then realise why you were paying for it, because it was driving traffic through to your website, which was gaining you more customers. So I would suggest that if you do decide to cut any costs like that, you really look at what impact that has on your income in the next month or so you can track how well, what sort of, was it a good judgment call? And yeah, just generally try and put a bit of money to one side, I think, and that hopefully will help you be in the right position to keep as many of your staff as you can when that furlough scheme ends. I've got a question from Tilly from Instagram. And Tilly says, "Morning, Judith. Does distance matter when hiring an accountant? I have a small retail store and was handling the accounting at my end, but I'm now thinking of handing it over to an accountant so I can concentrate on growing your business." Tilly, this is a great question. And if you'd have asked me this question 10 years ago, I'd have said it's incredibly important to have a local accountant who has a local understanding, that you can pop in and see, and they can come out and see you, because you need that interaction with your accountant to really get the best out of them. Now, it's completely different, and particularly in the last 12 months, because the pandemic has made accountants get used to technology and use technology, Zoom calls, Teams calls, Google Meets, telephone calls more. What the pandemic has taught us as a sector is that we can communicate with our clients without having to travel to them and sit in front of them, or without requiring them to travel to us and sit in front of us. We can do it all via things like Teams. My team actually deliver an outsourced bookkeeping service to an awful lot of our clients, because very much like you've said, they want to concentrate on growing the business and not have all the time taken up doing the bookkeeping. And our businesses are anywhere from down the road to ones that are 40, 50 miles away that we're doing the bookkeeping. We even do the bookkeeping for a company in the Netherlands, and we've just won a contract to do some bookkeeping for a UK business where the owners are in America. That distance doesn't matter anymore. It's now more about getting the right fit for you, the right accountant that will work with you, who will interact with you at the right budget that you've got. So I would definitely say there's absolutely no reason why you can't look a bit further afield for your accountant now. You're best having an introductory Teams call with a few. And if they won't do a Teams call, then they're not going to be the right firm for you. But if they're happy to jump on, do a call, run through what they can offer you, then that's a good start. And then it'll come down to how much you want to pay and what quality or level of service you really want to have. So I think now I've not got time for any more questions. So I'll just have a look at the poll results. So the poll today was, have you a cash flow plan for the next 6 months, which is fantastic poll for what we've been talking about today, because a lot of it has all been about planning for the next 6 months and looking at your cash flow. And 40% of you have one, which is absolutely brilliant, and a lot higher than I probably would have expected, to be honest. When we talk to my own client base, we've got to get them into the habit of doing it, and quite often people are a bit nervous about it. But that obviously means 60% of you don't have one. So hopefully what I've spoken about today will have encouraged you to have a think about doing one, if nothing else, and hopefully take that one step further than thinking about it, and actually doing a cash flow forecast. And like I said, if you're using QuickBooks Online, it'll be really, really straightforward to do it. You don't need to do one that is really complicated. Just keep it simple, align for what your income is expected to be, and then the costs that you definitely know are coming out, put them in, and just see what that cash flow would look like. And just remember, as I said, top tips, make sure you include VAT, make sure you increase any costs if your turnover is going to be going up exponentially, make sure that those costs follow that, and keep it simple. And finally, as I said at the start, make sure that you ask for advice from a professional if you need it. That's what we're here for. And hopefully you can see from what I've said today, we really enjoy doing that. That's the bit of our business we love doing, is helping people to make sure that they can see forwards, and they will still be here in 6 months, a year, 2 years, 10 years. That's what we're here to help people with. So it just leaves me to thank you all for your questions today. If you want to know anything more about myself or MHA Moore and Smalley, then please visit our website, which is www.mooreandsmalley.co.uk. We've got loads of information on our website, including an insight area with videos and blogs. So pop along there to find out some more info. Coming up on Ask the Expert tomorrow is Clive Rich, who is a barrister, negotiator and founder of a law tech business, Lawbite. So tune in to find out the top 10 legal bear traps most SMEs fall into and how you can avoid them. And just final reminder that if you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business advisors are available 24/7. Have a great day. Thank you.